Thanks for being with us. You have an interesting note here in our notes about the incumbent election volatility. So you say it's a little overblown. Can you explain why that is or what we should expect?
Sure. Every election lately we hear that it's the most consequential election of our lifetime. Markets don't like uncertainty. Markets are going to behave poorly. Markets are going to be super volatile. All I know is the data don't support the claims of the pundits. It's a great claim to come on and come in the media and talk about collapse coming, Biden wins, Trump wins, whoever wins. But the fact is, if you go back and look at incumbent elections, 2012, 04, 96, 84, 80, 76, 72, volatility actually contracts. Volatility gets compressed the closer you get to the election. You don't have double-digit moves, which would be an outsized move. You have some single-digit moves which fall exactly in the realm of normalcy historically. I started hearing about this in August, about these huge moves that people were expecting based on the volatility. It's just not true. You get very small moves, and you get some muted reaction right before and right after the election. But it's nothing like what we consider to be a volatile move even before COVID happened.
So here is my thought. In terms of market leaders, I know you see strength in certain areas, semis, transports, discretionary stocks. Before I actually get to each of these groups, on the night of the election, for example, when Donald Trump won the last election, it was horrific and the market sold off and it was the end of the world. And anybody who bought that night or that next morning made a lot of money. Would you get into those areas, such as the transports, if there were to be a big knee-jerk reaction pullback on the heels of the election?
I'll say this, and I've been saying that. So the first half of this year, pretty much, everybody asked me, how can stocks go up given how the economy is essentially in a modern-day depression? Since the middle of July, all I've gotten are questions about the election. And almost every question has been regarding, oh my gosh, if this candidate wins, if that candidate wins, everything is going into the toilet. I will say this very firmly with a lot of conviction. If we get any kind of pullback into the election, my view is it's a screaming buy. I think any kind of pullback, any bout of weakness ahead of the election are weak-handed sellers getting out, and then it'd be a good buying opportunity. If you got
and you should buy the transports and the semis.
The gift of the year. To your point about transports, what I find interesting this election year is, I created a Biden portfolio and a Trump portfolio. And I put sectors and stocks in there that would supposedly do better or worse given who the president is. And for the most part, they're kind of sort of walking together and performing equally. Certainly nothing that's screaming out that the market is overly concerned. I think it's certainly a fallacy right now. I keep hearing, well, first the blue wave was going to be horrible for stocks, but now because it looks like a blue wave that they're going to make $3 trillion in stimulus. The market does a super job of pricing in outcomes that it understands. The market did a poor job in March, but that's because we closed the economy down, and that was not foreseen. But the market knows that the Dems or Republicans can win the presidency or the Senate. Won't be any shock there. So I think if you get that little shakeout in transports or some of the other sectors that are leading, I do think it'll be a really nice buying opportunity.
Tell me about names like Lam Research and Xilinx, especially since we're waiting on the numbers this afternoon. And the AMD Xilinx deal, I don't know about that one. Tell me more what you think about this group, because usually you say this group is a buy on this pullback.
In person and over Skype, semis have been our favorite group. I want to say it's been since 2017. I'm sure a client would correct me and say I'm off by a week, a month, a quarter. But we continue to love semiconductors. It's one of, if not our largest position. It's going to continue to be. It behaves well. The fundamental backdrop remains strong. And look, the Chinese economy, which nobody wants to talk about, the Chinese economy is rocking. I know people are like, oh, that's impossible. No, I wish our economy right now were as strong as China's economy. And China's economy doesn't appear to be weakening either. The rate of growth is not even decelerating. So certainly the semiconductor area is one that gets full advantage of both what's going on domestically with stimulus and money being pumped in, as well as what's going on in China and Asia.